Welcome back. We're still hovering at around 78-60 odd levels for the Nifty. Let's get you some commodity strategies then. Naveen Mathur of Angel Commodities joins in for that. Naveen, hi. Good to see you in today and wish you a happy Diwali. Since it's the festive season, I'm going to start with your strategy on gold.
Thank you very much, and I reciprocate the same, the wishes to you and the viewers of CNBC on occasion of Diwali and the festivities coming ahead. See, actually what we have seen, the trend on the gold is a bearish trend. We maintain that particular view for some months to come in because of the stronger dollar. At the same time, the probable rate hike by the US Fed, which may lead up the dollar strength. Also, the risk assets have taken have overtaken the risk-averse assets, and therefore the equity markets and the riskier assets, particularly this year, has performed well versus the markets of the precious metal. We also saw the gold ETF funds selling largely in the last 2 years, and therefore for the coming few months and a year, we expect the prices to stabilize at around 25,000 for India and around $1,050 for the international markets. The trend remains bearish, and even for the intraday, although I should talk about the bullish trend for the markets on the festivities, but the trading strategy would be to sell gold contract on the MCX at around 25,700 levels, stop loss at around 25,900, 950, and stop loss at 25,400 levels.
Okay, Naveen, hi, good morning and happy Diwali. And what's your strategy on rest of the commodities, crude maybe?
Okay, the crude is again a sell. We all know about the kind of oversupply situation and the demand not being too great for India and the emerging markets, including the developed world. But over a course of time, we expect the prices to stable at around $50 levels. We are currently trading at around $45, $48 levels for the WTI and Brent crude. India markets looks like to be on the selling side, and we maintain the bearish view at least for the day 2, and therefore the strategy would be to sell the contract of November at around 2950 on the MCX, stop loss at around 3010, and targets in the range of around 2860, 2850. The base metal pack looks to be bearish again, and because of the concerns on China and the dollar strength, we continue to maintain the bearish view on the base metal pack at least for some more months. So I think even for the intraday, the trend remains bearish. I'm sounding a little bearish and pessimistic for the strategies today, but then that's what the markets are, and technical strategy would be to sell the contract of November contract on MCX copper at around 328, 329, stop loss at around 332, and targets in the range of around 323 to 322.
Okay, fair enough, Naveen. We leave it on that note. Thanks very much for joining in and talking to us. Well, those are some commodity strategies from Angel Broking, but let's get across to Kishore Nane of Motilal Oswal.